The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow Industrials up 142, Nasdaq up 23, S&Ps are up 14. We get the gold contract down 28, platinum's off 26. Bonds are down 30. King dollar's up 168. The euro's off 35, and the yen is trading out at 97.16. What's going on, brother?
How you doing, Tommy?
I'm doing great, man. How you been?
Good. Yeah. So how do you like this market?
I love this market, man. I love the idea that the Dow's up 143, and I think we're that's like a top line number, and I think we're on different sides right now. But bottom line is that I like how the Nasdaq's trading because I don't see anything there.
Yeah. Actually, I just took my I went ahead and played this counter trend rally yesterday.
Right.
Saw some nice divergence, a number of patterns that were setting up out here, and my target was 1635, and so I just closed out my positions.
Right.
So now I could have kept a tight stop in there, but it's hit the target that I was looking for, and we'll see if this we'll see what they can put in here. But really, I'd love to see the market close up strong, and then I'll probably sell right into the close.
Well, and what you have here, folks, is this. You know what's interesting? Of course, we can talk about the yen in a few minutes, but what you do have is that we're in the summer. It's a Friday, so you're going to get a light volume bounce, and more than likely what you're going to see is that this is the B2C of an ABC down.
Yes.
I expect, though, I can tell you this, we get the Dow up 142, Nasdaq up 23. I don't even think this is going to hold today. I think we're going to give back half of it, but we'll see where this shakes out. Something to be aware of, folks, okay, and this is a big number, is that the fast movement in the currency markets, okay, is a huge heads up. And that heads up is that the markets are just about out of control. So take it for what
there's been some pretty big movements, huh?
Oh, let me tell you something, man. That yen yesterday, a movement that fast, okay, and I'm not looking for a crash, but that's exactly how the 87 crash happened. That's exactly.
Well, and you've had two of them back to back get big movement this morning as well.
Right. And that's fast currency movements dislocate world markets very quickly. And the reason that the dislocation is so quick, folks, is that the aspect of what you're trading in, what currency you're trading in, and what has to be closed or opened on what gets pushed, meaning where the banking community has to close huge positions very quickly. So it's a heads up, man. That movement yesterday was absolutely amazing. There is no doubt about it, man. And what happened is that there's no doubt, it got saved. It got saved before the Nikkei opened. But we're not done yet. That's the way I look at it right now. So, they got gold again. This gold deal, let me tell you something, folks, is amazing, number one. But they got it going.
They talked about the Tuesdays with the market being up. I wonder, every Friday it seems like gold gets getting whacked. Maybe gold's got a longer string out here.
I'll tell you, man, there's no doubt. You got to be really cognizant of coming in on Fridays inside the gold market. And what it is, folks, it's the hot potato over the weekend. There's no two ways about it. And, factually what's happened is this. This is where, if I've seen anything out here on this downtrend, it has been the amount of misinformation that has really come out in the gold market. And what I mean specifically is this, folks, is the aspect that whether it's in the press, they're saying there's this many ounces bought in China, there's this many ounces bought in India. When you cut to the chase, folks, if you really go get the numbers, the real numbers are that the amount of selling in the GLD overtakes everything. Everything. It's by the tons. Don't talk. If you're reading articles, you want to talk tons of gold, not ounces of gold. And, you know, it's pretty intense, man. I mean, watching it, well, we both know. I mean, you know, even the physical market, do you know what I mean?
Yes,
you know,
yes, absolutely.
ounces mean nothing when tons are getting sold. So it's pretty intense.
Now, you know, you take a look at yesterday's actions. I mean, in the ETF structure, I mean, big volume.
Yes.
As the market pushed down.
Right.
Now that in essence, so as I take a look at that, that's really said that's our B point now.
That is our B point. You got it.
Yeah, it's got to be taken out with volume.
And it's a good ABC. It's a good A to B point. It's pretty intense, actually. So what we're doing right now is that we're coming up to basically ICE. ICE on the cash, well, ICE on the SPY is 163.94. 163.94. No, 160. Well, it's actually, yeah, it's close. It's 163.94 to 165.17, somewhere in there. And you're coming up there, with anemic volume, you know.
Yes.
So it's
so
going to
far
be
this morning, absolutely.
The NASDAQ, the NDX 100 is really weak. And this is what's going to get, it's like, okay, why can't that get going? You know, we'll see whether it can. But that's done, it's doing 8 million shares right now. And that baby yesterday did 63 million shares, folks. So would you think that if this can get enough energy just to get up and tag the low of May 22nd, 73.24, that would be, and then close back below it, you know, on less than 59 million shares, that would be a nice trade setup? That'd be the number. Yeah. I think they, you know, just as you're saying, I think you're going to be able to do the flip today. I don't see this thing coming into next week. Just don't see it happening.
Yes.
Listen, folks, if you haven't test drove the Nadex platform, come over to our website at TFNN. You're going to see the banner right in the top on the right-hand side. You can bring that platform up right now. They'll put $25,000 of funny money into your account. And bottom line is that if you want to basically understand the volatility, number one, in the market, but when you're putting trades on, that the trade is your stop. And these markets here, it's just as good as you get. Let's go to Ilka in Boston. Ilka, what's going on?
Hi, Tom. Hi, Steve. How are you guys?
We're doing great. How you been?
Oh, good. I was listening to you. I always listen, actually. I just cannot call all the time. But I'm actually with you on the markets. I don't think they will hold it today. So, but I'm calling regarding a dollar. Your comment on the dollar. What are the volumes? Because I'm actually seeing that it has still potential to go a little bit lower, but I want to hear your volume.
Well, this is what we did. We hit 108,000 contracts yesterday, but we've tested it this morning. So it's done, you know, for what I do, it can be like that's the test, okay? So we hit 81.06 yesterday. Today we would hit 81.08. And it looks like it will do about maybe 70,000 contracts versus the 107,000.
But okay, but I'm looking at the 11 o'clock yesterday.
Yeah.
This is on the longer, like on the 2-hour.
Okay.
That volume spike there, I don't think it was tested in a way that it would satisfy me that this will not visit there.
Okay, so we'll do two different things. I have the 10-minute up first, which I use. Okay, so the 10-minute. Hit that bar with 9,000, and then we hit that bar this morning with 5,000, 5,700 to be exact, versus 9,900.
So
and then let me put up the. You have the 60-minute up. Is that what you have?
No, I have the 120, but 10 minutes is fine. I mean, 10 minutes. Even with 10 minutes, the 10 minutes, then it would be 1220 of yesterday. That low bar, yeah. That was pretty high volume, and it was coming with high volume. So I just don't. The test that they did today just doesn't seem like plus euro to me. It seems like it has to hit one more time.
Oh no! Listen, it can. I mean, there's no doubt that it can. What you have though is this: is if we close where we are right now, which is 81.69, that would be saying that no, that is the test, and you're in the higher range again. See that?
Okay.
You see what I'm saying? Because what you have, folks, is that when we broke topside on the 10th and on the 14th, that gave you another range. Now, we're certainly not in that high range, okay? But the other range is from that swing point from May 1st. And that low of that swing point is 81.37. So right now it's saying we're rejecting that low. You know.
Oh, okay.
You know I tell you this though. What I like what has happened here is this. Is that I like the context of how the bonds have traded down. They go back inside the range, and yesterday was the first time that we actually got acceleration with volume again on the way up, and today we're doing 350,000 contracts. We did 6-something yesterday. The reason I'm not switching gears here, folks, but I'm just showing you is that the way bonds traded yesterday. See, what bonds had done is this. Bonds got absolutely smoked last week. They come down with 700,000. They test with 600,000. They go up yesterday with 630. Today we'll have less. But that test yesterday is saying, you know, bonds have a shot now to go to 148 again, which is insane, okay? But bottom line, when I put that together with what the dollar's doing, it's like, okay, that's the harmony right there. And then I put the market together and say, okay, you're going back up with lighter volume today. When I put all those together, it's like, okay, hold it. Bonds have tested. Dollar's tested. Both, well, the dollar, if it stays here, is back inside the range. The bonds aren't yet, but it had a nice acceleration yesterday. If the market even gives up 30 points, well, S&P points, let's say they give up 5 points today, that'd set up next week as a bad down week, you know. So.
Yeah, I agree. I agree with the S&P. I'm not really agreeing with your dollar yet, but I do agree with S&P.
Listen, the dollar, Ilka, every single time I see your name come up there, I gotta get you brainwashed. You know, it's gonna take a little more time, a few more months, maybe a couple more years.
Tom, brainwashing has already happened in my life before. No brainwashing here.
No brainwashing.
But I agree.
Well, I'm trying to unbrainwash you from the euro.
Oh, I'm brainwashing. Got it. The euro moved yesterday with the volume that I was looking at. Basically, it's just telling me it has to test. It hasn't done everything for me to satisfy that the up move is done, and with the same value with the dollar. But in the long run, we're talking long run. I'm talking short term. So it's I agree with you.
And Ilka, how are you using the dollar for your trading? So why you're focused on the U.S. dollar index right now?
The dollar really I really trade euro.
Okay.
So basically, I use the dollar for the testing because I don't get the volume on the euros. On the Europe trade, on the
sure.
So that's based on the contract. So that's why.
I get it.
And cool. And not only that, for the market purposes because of the E-minis as well. So yeah, I kind of I was looking at it yesterday, and I've actually just recently put only 10-minute and the 120-minute for volume purposes, nothing else, just to watch what Tom is talking about. Yeah.
Ilka, have a great one. Have a safe one.
Take care, you guys. Have a good weekend. Thank you again. Bye. Always nice talking to you.
It was a pleasure. Steve Rhodes, Tom O'Brien, appreciate you growling and prowling with us out here, folks. Dow up 123, Nasdaq up 27, S&P's up 14. We're going to be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. We hit the Dow up by 151, Nasdaq up 25, S&Ps are up 14. And if we go take a look at how we're doing this, folks, what you have right now, it's still early in the day, but as the day moves on, it will actually get slower. We're at 133 million on the NYSE, and we're dealing with, let's see what we have here. We are dealing with 373 on the NASDAQ. And both of those, if you happen to be watching Tiger TV, both of those, when that L is beside it, when I pull that up, that is the lowest of the last 30 days. That's how that works per hour. It doesn't mean it will stay that way, but that's what that means at this particular point. So we'll see where this baby shakes out. The dollar, of course, that got smoked out here. The yen. You know, Steve, what's going to be really cool here is that, did you see yesterday, it's pretty amazing yesterday, folks, what happened was that BlackRock came out at 11 o'clock in the morning saying they were shorting more yen.
Really?
Yeah. This is before the downdraft. It was like, oh, really? And then I saw the downdraft come in. I says, oh, man, this is intense. So so the dislocations. This is just not a retail deal, folks. Okay, that's my point more than anything. Okay, don't think for a second that these large players don't get in the middle of something and they don't know how to get out of it. So
No, absolutely. Now, what's moving the Qs this morning? What's moving the Nasdaq 100?
Inside the NDX, we have. Let's see. So you got what's that? I haven't seen that one for a while. CA, is that Computer Associates?
Computer Associates, yeah.
Yeah. Let me just see this. So, yeah, that's an ABC up. So what's happening here? So let's see what we have here. 8-week high. It's bottom line is it's over a swing point and it has some juice behind it. Let me just see this. CA. Yeah. You got, right now we've done 3.9 million, 5 million's the number, and it wants to go. Let's see what else is moving this baby. So, Celgene, that's done though. That's up $4. That's been volatile, folks, meaning the biotechs, what has happened is that the biotechs took the NDX 100 up the last leg and came off the highs and took it down too. And,
yes.
And Gilead and Baidu. Baidu's up 3% right now at 374. And all that's doing, though, this is what the difference is, folks. That's going up to fill a gap. Just even actually hit the top of the gap as a gap down from $115 down to $95, and that's going up to fill that gap, which is putting pressure on the NDX 100. Is Equinox. Oh, look at Equinox. Whoa, hold it. What is this?
Yeah, we looked at that earlier.
Whoa, baby. Look at that. That's a dustin'. Let me pull this back a little. So you have 5-year monthly. Oh, man, look at this. Is a no-brainer. Oh, man, look at this. I'm telling you, folks, it's amazing how they can bring stocks up with no volume. This stock, you want to hear something bizarre, folks? The stock's at 190. It can trade back to 105. What does this do? What is this? Okay, provides core internet exchange service and networks, infinite infrastructure. Bottom line, folks, is that that's.
Well, if you go ahead and pull it back even further to your left, and then there'll be something that sticks out when you take a look at it.
Oh, I can't wait. Okay,
October 6th of 2010.
Let me pull this up. So it's EQIX. That's what we're looking at. And I think it was, yeah, right. That's the that's the number. That's the $100. Yeah. That's where it's going. And folks,
100. I've got it at $69 as the low.
Oh, the low. Yeah, I'm just saying the high right now.
Got it.
The 105. Okay. You know. But folks, you want to take a look at this. Just mark it down, okay? Put it on, just mark it down and keep it on your desktop so you'll see when this baby hits it. Because once you really understand when these things turn, that it's a magnet. They go for the last time of supply and demand. And it's going to be a destruction. And particularly with this one here, what you have is this. You have it all. You have last time with volume is down at 105. But it's just not that one day. You can actually go back over to 2007. And you can see it had the volume there, fell apart from 121 down to 33. This time, what does it do? Goes all the way up to 231 with absolutely no volume and tests it twice and then falls apart. You stay right there, folks. Steve Rhodes, Tom O'Brien, appreciate you growling and prowling with us. Right now, we get the Dow up 161, Nasdaq up 25, S&Ps are up 14. We're going to be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, we get that up back 58. Nasdaq's up 26. S&Ps are up 14. And percentage-wise out here, what you have happening, folks, is this, is that you got the Dow up 1%, S&Ps are up 0.9, Nasdaq is up 0.7. What we just have had is that over in Europe, the DAX and the FTSE, they got some, well, the FTSE is just 1.1, but the DAX got some juice behind it. The DAX is up 1.4%. What gets interesting about that is that the DAX has seemed to be trading like the NASDAQ. So it's going to be interesting to see if, in fact, the NASDAQ is going to be able to get any movement here. Hasn't yet, but we'll see whether that can get any traction.
Now, over the last couple of days here, actually, you know, where the IWM had been the weak link out here, you know, when I compare it to just simply coming back into the gaps that were formed back on, what was it, April the May 3rd, was it the May 3rd? I should have the date etched in my memory.
Yes.
You know, the IWM, you know, really never got down there. Still really trading with inside that May 22nd swing point. Yet this morning here, it's the weak link. So, you know, some of that's the gold and stocks inside there.
But that's going to be nice. See, because what you have, right, which is cool, okay? So you have the IWM, folks, at 98. The high was 100. It gets down to 97. The gap that Steve's talking about that is going to get filled is at 93 to 92. So it's like, okay, man, it comes up here, has lighter volume, you can fire away again, and the next leg down will get it down into that level. Because what you do have is this, and this is what just as a classic on this, I'd suspect on most of the indices, but since we get the small caps up here, when you take a look at this, I got to do this again, it's absolutely amazing channel-wise where this whole thing is going. Because all we're doing right now, folks, if we take the last 6 months, is that, I'm going to make a better line than that, but what you're seeing is that you broke the uptrend with conviction, and conviction, in my interpretation, folks, is wide price spread, accelerated volume on the way down, and you did that big time at much lower prices. It was on actually April 15th when it actually got done. It broke the uptrend with 100 million shares. So when the IWM was at 93, it was screaming that, okay, it wants to go to 83. But guess what? It goes to 100. Okay? But it comes up there again. What does it do? It breaks with conviction again. And now what we're doing, we're going to the top of that channel line. The top of that channel line is 98.59, and we've hit 98.29 today. Okay?
And what's interesting, of the 4 ETFs out there, it's the one that's going to be the easiest to break its swing point now. That B point didn't have the volume like the NDX did, like the SPYs did, like the Diamonds did.
Yeah, there's no doubt. There's no doubt about that. And what you have, folks, is you have about 46 million there. What is going to happen, and that's what we're going to see at the end of today, is like the amount of volume on a weekly basis is going to be high volume on a weekly basis hitting into swings. Because what had happened yesterday, in fact, I'll bring it up right now, what you're going to see is that even before the trading started this morning, folks, the Qs had already had higher volume than going into the breakout area. So that's going to be right across the board. And there's no doubt that the top line number out here, the Dow is up 174, so they're going to get some good top line press out here. There's no doubt about it.
Anything weak inside the Dow? What's the so you got, I guess, Intel. Now, Intel's an interesting chart to take a look at.
Yeah, it is.
Let me see. I think I got it somewhere out here.
So inside the Dow, the Home Depot is the mover out here. If we could, we'll stick with Intel though. We take a look at Intel. Oh yeah, look at that! Oh my God.
Yeah. So what it did was it formed. Now it had some volume, obviously. Coming into it on that June 3rd day. So it had some nice big volume coming up there, but it all it was doing was forming a 0.618 Gartley sell pattern.
Yeah, and it gave it up big.
It did.
Yeah. Wow. Look at that. Now this is intense, folks. The reason this is so intense is that those chip makers really they had also got some strength inside the Dow and inside the NDX 100. Look at that, man.
Yeah, so it gave you that nice reversal shooting star. Gave you the 0.618 Gartley sell.
That's pretty.
Didn't hold those highs.
Yeah.
It's going to be interesting.
I like the looks of that. And that means I like the looks of it on the short side, folks.
Yeah.
Oh man, I'm telling you, you gotta love it. If we go over and we take a look at we just pulled up NDX. Inside the NDX, okay, so Qualcomm. Let's go take a look at Qualcomm for one of the tigresses in the den. So you get Qualcomm, folks. She's down $1.37, and she's on her way down to the 59.44. Right now you're at the 61.60. What you have, this is screaming. You have two high volume lows. High volume lows, folks. That's where they're going. And we'll see if it breaks it with volume. Can get a lot lower.
Yeah, so when we take a look at today's bounce, take a look at the volume, we know that you had the biotechs, which had, as you were pointing out, it led things up, then really started leading things down, today to the upside, inside the index, right? You've got Celgene, Gilead, Amgen, Alexion Pharmaceuticals, Biogen, so you've got the 5 and probably the top 10 of the equities lead the NDX to the upside.
Exactly. And if we go over to gold for a second, folks, I'm telling you, be wary of this gold market today. We're down 32 right now, but, we can be down 50, folks, in the next hour and a half. So This lower swing point wants to get tested. And
now, do you think that it's just going to be tested, and you think that this will hold, based on any of the volume patterns right now, or when you take a look at U.S. dollar index, you're looking at that at getting, making an expansion pattern. Is that correct?
That's correct. So that would be saying to me that gold is not going to hold, right?
Yeah.
Because this is what's happened, folks. I would have much rather the test of the lows get done. The test of the lows of April have not been done. And the longer they don't get done, all this is doing is building cause to go after them. And this is a long-time cause, folks. And each and every time it is proven that gold can't get higher. And there's no volume at the highs at all, So it's like, man, they're going to smoke this thing. And it doesn't take much to smoke it. That's what it really comes down to. And when I do that correlation and I put it inside that, that the dollar wants to go there, it just looks to me that when the dollar's at 89, when gold basically spikes those lows, that's going to be the buy. That's how it seems to be setting up. Because if you see the Wall Street Journal today, folks, what you'll see is this, is that John Paulson has just changed how he relates to his investors about his gold fund and the gold trades that are inside it. And the reason is that, he has a lot of other funds, and a couple of them are up big, a couple of up 27%. I mean, he's got some good numbers out there. And what the article's about is that he feels, the fund feels that they've been getting too much press because of his bad trade in gold. Well, there's two different things that happen. They're showing that the gold fund right now only has like 300 million or 400 million. Well, the reason for that, folks, is that he's been down 3 years in a row to the tune of 40 or 50%. So, it started out with billions. Now that's what it is. But the second part of that, when I saw that, I like seeing that, because that's what it's going to take to get into lows, to get a real low end. You know what I'm saying?
Yeah.
We're going to need...
I was going to say, is your take, so, you take a look at the U.S. dollar index.
Yes.
And so in this case here, you're looking for gold to probably bust the April lows, get down into the $1,200 range?
Yeah.
Lower?
Yeah.
Yeah.
Yeah, it can hit it like nothing. Nothing. Yeah.
And then in order to pull the, so let's say gold gets into, it does that, gets into 12,000, 1,200, 1,100, somewhere in that range there. Are you going to wait for a signal on the U.S. dollar index to pull back, or do you think that correlation might then all of a sudden start changing between a stronger dollar and gold also moving higher?
No, I don't think the correlation will change.
Okay.
I think what will happen is this, is that I've been, talking a strong dollar since the dollar's been 72, right?
Yes.
So what will end up happening is that when the dollar's at 89, then the whole world is going to start talking. The dollar's going to go to $1.10, and I'm going to flip around the other side and say, no, that's the end of that move, because that move started, folks, over 3 years ago. And the dollar would settle out, gold would be low, but bang, that's going to be the buy, because then the next 3 years after that, then inflation will start coming in because of all this money. Inflation is taking, much longer than anyone ever expected. And I expect it will too. I mean, I don't expect we're going to see that, another 3 or 4 years, but it's going to be there. It'll be slow, it'll be meticulous, and what I expect, what you'll actually see. Now, this is watch this play, folks, because this is a trip. When it takes place, this is the way you want to wrap yourself around about what is the real interest rate. See, because if inflation is taking place, inflation's not going to matter if we're running inflation, let's say 4%, and the bonds are still 3%. And then inflation's running 5%, and the bonds are still 3% or 3.5%. You see what I'm saying? Because the cost of money is still going to be cheaper, and there's still going to be plenty of money to be made. But what it's going to do is going to get rid of the deficit ASAP, and it's basically going to, inflate the economy in a way that most people can do pretty good. You know what I mean? So
that ought to do pretty well for your Tiger Real Estate Opportunity Fund.
Oh, it'll scream. It'll scream. And there's no doubt. And, folks, if you do have an interest in the real estate market, the fund is closing September 30th. So if you have an interest in it, it's a closed-end fund. It's closing for investment on September 30th. But come over to our website at TFNN. You can email us at tigerfund@tfnn.com. I'm more than willing to walk you through it. And there's two different, just so you understand, there's two different investments. One's $100,000 minimum, the other's a $15,000 minimum. So if you want to take a look at what we have and what we're doing, it's all right there. So, yeah.
And what are you seeing taking place, on the doorstep? What changes from the time that you first, opened up the fund and started buying the?
We buy everything at the courthouse. So we've been buying. We search like 600 titles a month, and now that's down to about 450. So the inventory at the courthouse is going down. There's no doubt about that. Retail-wise, in Pinellas County, the market's screaming, meaning going higher. The neat thing is that there's 3 different markets here. And the courthouse is still open, but retail-wise, things are good because what ends up happening is that the tax base, so check this out in Pinellas County, folks, the tax base, they've collected more taxes this year than they've ever collected. That's how busy it is in Pinellas County. You got to remember something, Pinellas County is all beaches. It's all tourism. It's not all tourism, but we have real jobs, but we have tourism in a huge way. I can tell you this, so check this out, Steve. This is wild. We have a couple short-term apartments that we actually just put up last Thursday on the beach. You wouldn't believe how many, and this is where the internet is amazing, folks. We have them on Home Away, and you just wouldn't believe the acceleration of interest, like in 5 days. It blows my mind. And you know what? It's amazing for all you folks up in Canada. I knew Canada was huge, but Ontario, oh my God. Everyone wants to be out of Ontario in the winter. I mean,
well, Florida is Michigan's lower peninsula, and Ontario is just it's just on the other side of the river. So you bet.
Oh, it's interesting, man, because I'm telling you, it blew my mind, man. I mean, it absolutely blew my mind. And then we got this is a funny story. We got a couple that actually flew down here last week, 1,500 miles, because they wanted to look at the places, right? So they flew down, and when they were down here, I was with the guy, and the guy gets a call from his realtor in Ontario, and the realtor tells him, hey, you got to look at this place that this Tiger place has. These places are beautiful. And he gets off the phone. He says, you wouldn't believe the call I just got. And I just cracked up, man. Isn't that funny, though?
I love it.
Yeah, no, it's really cool, man. I mean, and, it's big business. It's big business. There's no doubt about it. And so it's, I knew Canada was huge. And that, so I'm saying to the guy, so you got to picture something. I'm saying to him, well, you got to sell that Canadian dollar, man. That Canadian dollar's going back up. And he was explaining to me, they've been down here for, I think, 20 years. He says, yeah, the most they've ever paid is that when it was 65 cents. You know what I mean?
Yes.
So, and the thing that is amazing, folks, there's no doubt that the Canadians have to always be aware of what the Canadian dollar is versus the U.S. dollar. There's no two ways about it. I mean, because they've, it was weak for so long, and then the last 7 years it's been so strong. I mean, it's
yeah, compared to what they were used to. That's right. Absolutely.
Yeah, and what has happened, because I got some great feedback from this couple, and what has also happened is that I think they actually, the real estate up in Canada has been really strong. This guy owns 6 houses, and it was like, I mean, strong market up there. You stay right there, folks. Steve Rhodes, Tom O'Brien, appreciate you growling and prowling with us right now. The Dow is up 185, NASDAQ up 32, S&P's up 16. We're going to be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow up 165, NASDAQ up 28, S&Ps are up 14. And don't forget, folks, each and every trading day, 9 a.m. to 6 p.m., you can get live content 9 hours a day right on your cell phone at tfnn.mobi. On the front page of TFNN right now, we got our man, Mr. Andy Hecht. He has a great research paper out. It's crude oil, what every investor needs to know. That is absolutely free, that report, folks. It's 10 pages. Just go over to our website at TFNN. You can get that, and it has a lot of great information on it. So we got gold down 32 right now. And what happens, folks, is that gold only has about another hour and a half to get down about another 18, 20 bucks. We'll see whether that's going to take place. But on Fridays, it doesn't close to this afternoon, but it's really realistically by 12:30, it's kind of done.
Yeah. Now during the break there, I went ahead and flipped to the short side of the ES.
Oh, that's a beautiful thing. I see. So you flipped right on time.
and what I was looking at here is I've got on my screen, I've got the 120-minute ES Mini.
Yes.
Now, normally I'm paying attention really to the 30 and the 10, but yesterday when I went ahead and took the counter trend move, it was for a number of different factors. One of them also ended up being this 0.618 Gartley buy pattern that it set up.
Okay.
And then what I also set up was, Bud's price channels out here.
Right.
So what I've also got in here, the red line's the descending price channel, and you can see when we were on the break, it had gotten right up into that price channel.
Yes.
Also at the bottom of my screen, I like to use the relative strength, relative weakness indicator out here. In the last 2 times up here, in fact, right up at the highs back on May 22nd, it had gotten into that overbought territory, and we saw a nice bearish candle that took place. Don't have the bearish candle right now, so I'm just simply using it as a normal resistance area, that declining tops, because it has held. It held, back here when, let's see, around 11:30 in the morning on May 28th.
Yes.
As price got up into that level, and now we're right back up there. So everything is lining up here. So I just went ahead and flipped to a
good for you.
short.
Well, you listen. You know what's funny is that you're only going to need the E-minis, folks, are at 1637. You only need 1635.75. Within another, let's see, you get 5 more minutes, and then you'd have a bearish engulfing. Or I'd have it on my 10-minute. I'm looking at the 10-minute right now.
As am I. Yeah, as am I. And there's another pattern that I trade on the 10 and the 30 minutes. It's not there yet on the 30-minute, but certainly on the 10. And it was really that. It was another pattern that I trade plus that bearish engulfing that I'm looking at. And yeah, it's got 3 minutes in order to, but it's a combination of taking a look at the 10-minute chart and then, which is not on my screen right now, but knowing on the longer term chart that it's hit this. Now, if it breaks outside of this channel, then price can move all the way up to 1651, which is the 618 retracement. But this price channel right here should be real nice and strong. What I like about the U.S. dollar index, and part of what Ilka was asking about, if in fact it were to close right around here, it's pretty close to a hammer candle. So it's
oh, that's
held.
a big hammer too.
It might be starting to get away by moving a little bit too high right now, but it's real close. So it's got some real. So that really lays out what you've been talking about as far as gold and going back and testing those lows, and most likely now busting the lows. Because with the U.S. dollar getting waxed yesterday, gold hardly budged.
I know, man. What Steve just brought up, that's a huge deal, folks. There is no doubt, man. Let me tell you something. When I watched that come across, it says, you know what? It wants to go lower. You stay right there, folks. Good on, man. Mr. Basil Chapman coming up next. And then, of course, we're going to keep you healthy with Nico and Paige. And Steve Rhodes, Tom O'Brien. Steve, you have a great one, safe one.
You
Thanks,
too.
folks. Have a great one, safe one. You stay right there. I'm Mr. Basil Chapman's coming right up.